Hello, good afternoon. My name is Richard Price, and I'm Chief Legal and Corporate Affairs Officer at Anglo. And I'm very pleased to be chairing this panel with you. It's great to be with you after a very stimulating couple of days at the Future Minerals Forum. I'm mindful that we only have 30 minutes, and I think a lot of interesting things to cover. So I'm going to take the liberty of introducing the panelists myself. Not that they need much of an introduction. To my far left is Dan Yergin. Dan is the Vice Chairman of S&P Global. Dan is well known for chairing the CIRA Week and is a Pulitzer Prize winning novelist.
It's not
author.
a novel.
No, it wasn't a novel. For his book, The Quest, Energy Security and the Remaking of the Modern World. To my immediate left is Sir Paul Collier. Sir Paul is a professor of economics and public policy at the Blavatnik School of Government at the University of Oxford. His work has covered various strands of economic development and issues of democracy in countries with low income and high natural resources. So I'm going to start with Dan, perhaps to talk about a challenge which I regard as a generational challenge for us in the industry and in society, in that we are facing a pending shortage of copper. And copper, as you know, is essential to power economic growth and human development, which is why I consider this to be a generational challenge. Dan, you released a rather important piece of work last week.
Oh, you have a copy, great.
Which we have a copy. And this is about the future of the copper market, in which you forecasted a rather alarming impending deficit in copper supply. Could you start by elaborating on your report? And then in particular, I'd be interested in your views on the implications of this shortage for development and for humanity at large.
Well, thank you very much. Very glad to be here with you and, of course, with Professor Collier. Yes, we called our study Copper in the Age of AI. And I was thinking, if this conference was not 5 years old, but 10 years old, and we were here, we'd be talking about what we said one vector of demand, which is lighting, construction, all the machinery and so forth. But in the last 10 years, we've added 4 other vectors of demand to copper. One is energy transition. An electric car uses 2.9 times more copper than a conventional car. A second new vector is, of course, AI and the incredible appetite of electricity. And thirdly, after that, you get to the new vector is defense, and that spending's going up. And then somewhere, maybe 5 years from now, we're going to have humanoid robots walking around, and they're all wired. So what we basically say is we are in an age of electrification. 15 years from now, global electricity demand may be 50% higher than it is today, and that means we need about 50% more copper, and then we'll get into it. It's doable, but there are a lot of obstacles to it below ground, and there are a lot of obstacles to it above ground.
And Dan, I mean, specifically, where do you forecast we will be when it comes to the copper market by 2040?
Well, I think if you take into account that we have our databases on mines, is that it takes 17 years to bring a major new copper mine on. So if you started today, it's almost 20 years away from now. So basically, we didn't do a specific forecast. What we did is a bottom-up analysis, and then we matched the demand needs against supply and said, how do you get there? And it means obviously everything from new mines to brownfield expansions, to more predictability in terms of investment, and something we talked about before. It needs the investment community to support these long-term projects in one way or another.
And maybe before I turn to Sir Paul, just one further follow-up, which is, if we do end up in a position by 2035, 2040, what have you, where there is a significant shortage of copper supply. There just isn't enough supply to meet this increasing demand, which is growing prodigiously. What happens? I mean,
Well,
how does copper get allocated?
Well,
in
it's a
those
shortfall. Are you going to have 2 billion more air conditioners in the developing world? Or are you going to have all of these data centers for AI? Or is the battlefield going to be as electrified as it now appears to be in Ukraine? So there are going to be trade-offs. Price will be a big determinant of that. But I think that for AI, for these data centers, I mean, we see in the U.S., 20% of copper demand will go into data centers in the U.S. For defense, you could say that demand is inelastic. It has to happen. So there'll be trade-offs. So I think the trade-offs will be in terms of economic development. I think it will negatively impact the developing world.
Okay. My fervent hope is that we don't have that kind of a shortage where we have to make choices between things like AI data centers and air conditioners for India,
Right.
which is getting increasingly warm, and where air conditioners are a matter of life and death.
Right.
So in order to get to that point, we're going to need to increase copper supply at an unprecedented rate, which is going to require us to build mines like we've never built before. Sir Paul, our ability to bring those new mines to market will be predicated on the relationships between industry and host governments, where those ore bodies are located. And obviously, there's a long history in terms of those relationships. Can you comment on how the relationships have evolved and how you think they will need to evolve in order to facilitate greater mines?
Yeah, I mean, look, this is great news. That it's part of this transition to electrification which can benefit so much of humanity. But, you say it takes 17 years on average for a mine to get from start to finish, to producing copper. Let's look at the copper country in Africa, which is Zambia. And so this is a huge opportunity for Zambia. But if we look at the relationships between countries like Zambia and the mining companies, if we look at that history, it's a history of mutual distrust. And there have been behaviors on the side of the companies which warrant that distrust, and there have been behavior on the side of the governments which warrant that distrust. Both mining companies of governments have behaved in a very short-termist, opportunist way that snatched quick money now at the expense of a mutually trustful relationship. And so there's a lot of the past that needs to be lived down. How do we live down that past? And here, my economics comes in useful, right? Sorry, you've been lectured to by two professors of economics, really. And the guy I'm going to invoke is a good friend of mine, Nobel laureate, called Michael Spence. And he came up with a theory, called theory of signaling, which is perfect answer to the problem, how do you live down a past distrust?
Well,
You come across Mike?
yes, yes.
So so what is this theory that's so valuable? And it says the way to live down a reputation of being untrustworthy is to do something that if you were the guy they think you are, you just wouldn't do. It would be too costly for you to do. So let's try and apply that. You've got to do some behavior which is so out of character with the crook they think you are that they say, this guy's changed. Huh? So we could imply it in turn to the government and to the company. Let's start with the government. What sort of things have governments of Zambia in the past done which really, really breached the confidence of the companies? And I can tell you, it would be reneging on agreements on rights to operate. It would be restricting licensing. It would be insisting on employing some relative of the government, of the president. It would be all sorts of lousy behaviors, insisting on taking an equity component and giving it to his cousin, the president's cousin, that sort of thing. So that was the sort of the behavior that has to be lived down. Now,
go ahead. I want to add something, though.
Yeah.
So, but I think the problem, if we look forward, is that public companies that are mining companies live in the financial markets, and the financial markets want predictability and they want returns pretty fast. And if you're talking about committing billions of dollars for 17 years, that's, Google or Meta is a better investment.
Yeah.
But I want to introduce a different concept, which you may disagree with, which is called the obsolescing bargain, which is the flip side of what you've been talking about, which is you have a great ceremony, you make the deal, you have flags on the table, you have toast to the project ahead. But then once the company's committed and starts to invest billions of dollars, the government changes, maybe the cousin gets involved, or just the populist government comes in, and the terms start to change. And that in itself really starts to hit the gears of investment and the tempo of investment, and that becomes a big problem for the companies and a very big concern of the investors. The phrase is the obsolescing bargain, that the deal that's made gets changed once Richard's company has committed $3 billion. There's nowhere else for them to go. They can't take their $3 billion back. And so I see that as one of the really big challenges ahead. As a CEO of one of the other companies said to me the other day here, all I want is a little bit of predictability.
And partly the answer to that, where you've got political change, two rival parties, is you try and do something which is agreed with the opposition. And that's a difficult thing for the government to do, to reach out to the opposition and say, here we've got a common interest. We've got a common opportunity. The politician I admire most, I don't admire very many, is Helmut Kohl, who was the German Chancellor in 1992. And he saw the need for a big tax increase to rebuild East Germany. And he said, I won't be Chancellor for very long. This is a 30-year commitment. We need this to be a cross-party agreement. We're going to impose a new tax. It was called the solidarity tax. But it needs to be agreed across both political parties. And so he reached out to the opposition. To their credit, the opposition said, yes, this is a moment where both of us have got a common interest. That's the sort of behavior we need in an African government now, reaching out to the opposition so that it's secure a cross-party long-term agreement. Now, fortunately, Zambia is now led by a president who's a breath of fresh air to Africa, President Hichilema. He was from neither the main party nor the opposition party. He broke the two-party system, emerged from he's from a minor tribe, and he is a self-made businessman. And so he'd already made his money. He wasn't seeking the presidency for his own self-interest. And there he is, the president of this country, and he's got an opportunity to change the future of the
Paul,
country.
the question is, as we're looking at these big numbers that are necessary, are you going to get that? Are you going to get that stability and predictability around the world that enables these projects to go forward and investors to support those projects and those investments? Given the time frame, 17 years could be almost half somebody's professional career. It takes that long to get one of these done. And yet what we see is that the urgency is greater because we have these 5 vectors of demand where we only had 1 vector before, and it really is a big challenge. And and it's obviously also mining technology, as Richard, has to continue to improve to be able to meet the need. This is I think, as you said, it's a generational challenge.
And Sir Paul, I mean, you referred to that, history of mutual distrust, and that has to be kind of lived down, and we need a fundamental reset there. Are you optimistic that that's going to happen? Are you seeing sort of green shoots?
I'm seeing across Africa a new sense of realism, because there's a very simple reason. Africa is the one region where population is still growing very rapidly. And so Africa is an anomaly of a very youthful population ruled by very old people, very old men, basically. Zambia, again, is an exception. President Hichilema is not an old man. He did break this system. He broke it by getting a youth vote. And the youth vote is the big hope across Africa, that the youth vote will sweep out the politicians who don't face reality and start delivering good economic policy.
But the other side of that is, of course, no continent, the least electrified continent in the world is Africa. We have a chart in there of per capita electricity demand in North America and per capita electricity demand in Africa. And so if one continent that in fact needs this copper development for electrification is Africa, in a sense, from its own point of view, economic development more urgent than any other part of the world.
What are the youth of Africa addicted to? Like everybody else's youth, they're addicted to these. And what do these things need? They need electric power. And so the youth of Africa will vote for electricity without a question. So the challenge of meeting that electricity and seizing the opportunity of producing the copper which will enable it is a very exciting campaign pledge to get the youth of Africa, and of course the youth of Africa, once they've voted you in,
right,
they are increasingly the
in Africa, sub-Saharan Africa is going to be, 20% of world population?
Yeah, and what are the youth good for? They're good for innovation. They're really good for adopting new technology and adapting it. East Asia, for all its fanciness, has got its demographics disastrously wrong. China has grown old before it's grown rich. And so China is now increasingly threatened. It's running out of young people. And so the people who can adopt and adapt are in Africa. The companies that need that are across East Asia, not just in China. They're Japan, South Korea, Taiwan. Right. Where will they move to get youth? a lot of them will start to move to Africa. That's a huge opportunity following in the wake of this critical
No, I
minerals
think one
boom.
thing to note, this conference has grown from 5,000 people to 20,000. That says something about Saudi Arabia. And one of the questions, of course, is Saudi Arabia, all the effort that's now going into mining, is it going to be a big source of copper development? And will predictability of the rules mean that things happen here faster than they would, say, in the Andes?
Dan, if I may, just in the few minutes remaining, take us back to where we began with your report and this booming demand for copper. I've never seen so much conviction around a commodity as I do around copper, with all these drivers of demand, and it seems like every year there's a new driver that's been discovered. I mean, 3 years ago, I don't think we were talking about copper for AI data centers.
No, that only started in November 2022. The world changed when ChatGPT came out.
And you're now talking about robots.
Yeah, 3 years from now, we'll be talking
robots. There's going to be a sixth vector. We don't even know what that is. How confident are you, and how convinced are you that this boom in demand is going to be sustainable? Because a lot of big investment decisions, including by companies like mine, will be made based on that.
Well, you never want to say, trees don't grow to heaven, cycles reoccur. I think a lot will depend on what happens in the world economy. The age of globalization in which goods, ideas, services, and people moved easily from one part of the world to another. We've ended 3.5 decades of that kind of globalization. We're in a more fragmented world, and that will certainly, what happens to demand and economic growth. We have conflict that we didn't anticipate. So there will be those, call them exogenous factors, and that will affect that. I mean, when we look at $13,000 for copper now, let's say how much of that is signaling the future, and how much of that is because of disruptions, because of tariffs, because of economic protectionism, because of the dollar. It's kind of hard to sort out. And it's obviously for you guys, when you're making a 17-year decision, no one has a crystal ball.
So I'm hopeful that that opportunity will be seized in Latin America, where there's a lot of copper.
Yep.
All along that east coast, the Pacific coast, there's copper. Chile, great producer in the south, Peru in the north. So you've got
Argentina.
Chile. So you've got China, you've got Latin America and Africa, and as you say now, Saudi Arabia, which is itself a great critical minerals country. And Saudi Arabia is a key player because it is one of the very few which is both producing its own industry for critical minerals mining and financing it, setting up its own SOEs, and investing in these things
Now, there's one other country we should mention, the United States. If I said 17 years for a new copper mine, when we looked at it in the United States, I don't know if anybody in the audience can guess it, the average mine in the United States takes 29 years. Well, we have a new system in the United States. We talk about above ground challenges, these challenges of permitting, which are many countries around the world, and then judicial reviews. And perhaps we're seeing a change in that, and the state of Arizona may also join that list of more productive sources of copper.
Well, if my own country ever discovered copper, it would take a century.
Right.
So there's some countries which are just encumbered with delays from all sorts of sources. It doesn't have to be like that. It is possible to do these things really quickly but in a way that does live down the past. And that's, I think, the big hope and the opportunity.
So I guess, Paul, what you're saying, there really is a legacy, a historical legacy that sits on the mining industry today, and its orientation may be very different than the mining industry of 30 or 40 years ago. But you're saying there is a historical legacy that's
there is.
And
it has to be
people's
lived down.
minds.
Yeah, it has to be lived down, both in terms of the physical process of degrading areas and, probably more importantly, in the fiscal process of profit shifting and tax avoidance. So,
Richard, do you want to comment?
Well, yes, no. Sir Paul, I mean, you've written in the past, and it's been a focus of your research on the resource curse, and that's somewhat about, you know, the past. Mining needs to boom to address this demand that we've been talking about. Many, many more mines will need to be built. There's a great opportunity now for producing countries to reverse the resource curse. How, again, are you optimistic that that can be done?
well, put your legal hat on, and but now think of the golden rule. Don't do to others what you wouldn't do to yourself, right? And I want you to think of yourself, at the moment, you're behaving like a poacher, and I want you to behave like a gamekeeper. In other words, you've got to offer to a country, to a government of a country, that you will introduce rules which will limit your ability to shift profits and minimize taxes. You will agree to things like, what is the maximum interest rate we can charge our subsidiary when we lend money to them?
Sure.
That sort of behavior. And accepting those restraints, which, if we look in the past, not all companies behaved honorably. So it's that sort of thing that's the signal which will say, we are a changed animal. That's demanding. It will be equally demanding on the governments, but in this stalled relationship, somebody has to move first, and the mining companies are in a good position to do so.
But I guess there is an ideological baggage, I'm thinking as you're talking, to just being opposed to mining based upon either you don't like the market system, you don't like the idea of people, digging in the earth, or because you invoke images that are 50 or 100 years out of date, and it's politically useful to do that. And we see that operating in some countries today, where there's a very significant mine that's been shut down just because of this kind of, really on ideological grounds, and not really paying attention to, in fact, this particular mine in this particular country delivers 5% of the country's GDP. They've shut it down. It's the second largest export resource for the country. They've shut it down. And that's the sort of resource curse in reverse.
Yeah, completely. And but let's not exaggerate the gloom. I'll give you another example from Britain. Right? It doesn't concern critical minerals. It concerns oil. We discovered oil in the North Sea. The British government, or British governments, over the last 50 years have changed the tax regime on taxing oil out of the North Sea. 50 years, they've tamed it 25 times. In other words, every 2 years, on average, the regime's tax code has changed. And now, that's pretty extreme by any standard.
But that's an example of, in fact, a really obsolescing bargain. And what does that do? It leads to disinvestment. It means that I'm thinking of an oil company in London that's investing everywhere except the North Sea because of that. And so the cost is, what is the cost? There's a real cost to the Treasury. And Britain's still going to import oil. It's just not going to produce it itself.
Undoubtedly, it was a stupid thing to do, But I'm saying that, oil is still being extracted out of the North Sea, despite 25 changes in 50 years. African governments don't have to be as saintly as one agreement for 50 years to be better than...
That's a great example, Paul.
Yeah. So I think we shouldn't exaggerate the difficulties and the misbehavior of Africa if we benchmark against other countries. The level of policy instability is quite considerable at the moment, almost everywhere. So, on that note, I would say there's an opportunity for Africa, there's an opportunity for Latin America, just as there's a massive opportunity in Saudi Arabia, and I hope they seize it. And I think the youth will be on the side of change.
So thanks, Sir Paul. Thank you, Dan. So perhaps to wrap up, I mean, we did define this, what I think is a generational challenge, which is, meeting this soaring demand for copper with sufficient supply so that we don't have to make some hard choices down the road. I'm optimistic. I mean, that will depend very much on the relationships between industry and producer governments in the small number of nations that have significant copper ore bodies. I'm actually optimistic that that's improving and that we'll get there. I think both industry, governments, and others who have a stake in this space have learned a lot of lessons from the past. I think we do things better than we did before. There's a strong recognition of partnership and mutual benefit and the like, and that's going to be necessary to facilitate.
Paul, let me say, when we started this research project 6 months ago, we didn't think we would come to the conclusion we came to. We started looking at the demand's going to grow, and then we looked at the pace of electrification. We looked at everything, as I say, from electric cars to the electrification of the battlefield in Ukraine. And we said, these numbers, when you just do it bottom up, the numbers are much bigger than anybody's recognized. And I think once you see what the task is, then it both emphasizes the importance of copper as a metal of electrification, but there's a challenge there that I don't think has been really appreciated about, you talk about conviction, just the direction that things are going in and the requirements. And you asked a question which made me think a lot about, well, what are the trade-offs? So who will make the trade-offs between air conditioning? Lee Kuan Yew, the founder of modern Singapore, said air conditioning is what made the tropics work. Between that and drones or data centers, those are going to be big questions. And you need this kind of copper production processing machinery in a world that is more divided and more contentious than it was 10 years ago. You need it to work. And for the industry, it's an opportunity, but it's a pretty big challenge, too.
Absolutely. Sir Paul, any concluding remarks from you?
Yeah, I think we've not really talked about India yet, but India's the major place where if it got squeezed out of the ability to have enough electricity, that would be really serious matter, because that's 1 billion plus people with in a well-educated young population and enormous opportunities for growth, growth which will need electricity undoubtedly. And so squeezing India out of the supply of the copper that's needed to benefit from electricity would be a global disaster.
I agree. Well, I sure hope we don't have to face that down, and that the industry and government will rise to the challenge, and that we'll create the supply of copper that we need over the next decade or so. Thanks very much.
Thank you, everybody. Thank you.